Hi everyone, good morning and welcome to my morning report chart analysis videos with me, Richard Perry, market analyst at Handtech Markets on Wednesday the 24th of May. We've got a bit of a support coming in for the dollar. Yesterday we had comments from FOMC member Jim Harker was suggesting that a June rate hike was a distinct possibility, and that certainly helped to sort of stabilise the dollar. But we've also seen an interesting move overnight from ratings agency Moody's to downgrade China's credit rating to AA3, and that certainly has sort of led to some interesting moves on markets today, whereby the dollar has found support, but also equities are a little bit mixed today, with that sort of sentiment being hit, certainly on the commodities side anyway, of following on from that China credit rating downgrade. Now, what we have got today, I can show you, is the reason behind the improvement in the dollar is being driven by treasury yields, which are rising. The 2-year rising back above that 1.3% level. The 10-year, interestingly, round about flat on the day, which is sort of continuing to see this 2 to 10 spread slide lower. Initially we had seen yesterday's rebound of the dollar, but it's just sort of consolidating a bit today as the initial sort of strength of the dollar sort of unwound slightly. I'll show you that across and how that's impacted on some of the forex majors today. And interesting that initial sort of downside move on gold has retraced as well. But what we are looking forward to today is the FOMC minutes. Now, the FOMC minutes this evening at 7 o'clock. Markets will be looking out for any sort of hints towards further monetary policy tightening in the form of rate hikes this year. Possibility is fairly high of June, very high of June, and then into later in the year, possibility of December as well. So the markets will be looking out for that. But also balance sheet reduction. Has it started to be mentioned properly in the Fed meeting minutes? So that will be the key there. Looking later this afternoon, we've got the Bank of Canada monetary policy at 3 o'clock. No change expected there. Bit of interest in the outlook for the inflation could drive the outlook for the loonie. And then we're looking out for existing home sales for the States at 3 o'clock. 565 is the expectation there. That would still be pretty strong, wouldn't it? 565 down from 571. But the new home sales yesterday were pretty disastrous, or not disastrous, but very disappointing. So it'd be interesting to see how the existing home sales are impacted today. Crude stocks, minus 2.5 million barrels of drawdown, in addition to drawdowns of distillates and gasoline. Now, the crude stocks have been drawing down recently, and 2.5 million drawdown would continue that trend and help to support the oil price again in front of the OPEC meeting, which is tomorrow. And then the Fed meeting minutes are tonight. Now, my chart of the day is the Kiwi dollar. Now, what we have seen in Kiwi dollar is a rebound in the last sort of week or so, really, which has broken above this 69.70 resistance, which formed a little bit of a base pattern. I suppose you could argue a little bit of a bull target of maybe about 150 ticks measured up. So you'd certainly be looking out for sort of in the region of this resistance, certainly around 71 figure coming in, 1790 being tested potentially on the back of that recovery. Now, we saw a bull candle yesterday that just disappointed into the close, but today we've seen support coming in around that 69.90 level. Now 69.90 had been a pivot through March and April, and sort of finding support on that yesterday and again today and pushing higher is a positive sort of move there. So just drifting back into that support and then bouncing off that, with the momentum indicators on the hourly chart unwinding, stochastics rising, MACD lines sort of flattening off, RSI sort of gaining ground again. It looks positive for sort of a test, certainly, of that resistance, 1753. Now, the interesting thing also in this chart is this 89-day moving average, which is the blue line, which has limited recent rallies. Now, that comes in at 70.50. basically today. So that is obviously a basis of resistance, and so breaking through that would certainly open the upside, I think, for test of that range high, or the recent that high of March anyway, around 1790. So that little base pattern also suggests a test of that level as well. So the bulls are sort of gaining ground and holding on to that support, and looking to sort of improve again. So that crossroads that I talked about in the morning report looks to be sort of at the moment erring towards a positive Kiwi move. So I wish you good luck in your trading today, and I will speak to you later. Thank you.